Welcome back. Existing home sales jumping 3.4% to nearly 4 million in October. Home sales also rising 2.9% from a year earlier. The first year-over-year increase in sales since July 2021. But home sales are still on track to hit the lowest level since 1995 as mortgage rates are elevated despite lower interest rates elsewhere. Rates on the 30-year mortgage loan rising to 6.84% this week. That is a high number and typically has put a freeze on this market. Joining me now is the Connor Group founder and managing partner and real estate and technology entrepreneur, Larry Connor. The Connor Group is a real estate investment firm that owns and operates luxury apartments in high-growth markets in the South and Midwest. Larry, good to see you. Thank you so much for being here.
Yeah.
What do you make of this 6.8% mortgage rate? Does it, in fact, put a freeze on the housing market, as I believe has happened?
Good morning, Maria. Yes, absolutely. Nobody wins with high interest rates, whether it's in the residential housing or apartment sector.
So what is your outlook for housing under the Trump administration? What do you think President-elect Trump can do to address this housing shortage?
Well, I think the next administration has a tremendous opportunity to address a real and serious problem, which is affordable housing. And if someone was to ask me, I would take 3 positive, proactive actions. 1, reasonable common sense regulations. 2, provide low interest rate loans. 3, tax benefits. Do those 3, my view, you're going to unleash the full power of the American enterprise system. By the way, I think it's reasonable to expect those builders, developers, investors that they have to do 2 things. 1, build a quality product. 2, provide long-term, sustainable, reasonable, affordable rental rates.
Yeah, but does that address the issue with supply? I mean, hasn't the supply of homes been one of the most important issues here? People want to buy homes. There aren't enough to actually acquire.
Yeah, good question. So, yeah, I believe in terms of apartment communities, you could build hundreds of thousands of apartment communities that would address that sector. In terms of the single family home, it's the same strategy. Provide low-cost starter home interest rates and have reasonable regulations, because the issue is, to your point, if an interest rate's 7%, you close people out. If the interest rate is 4%, it makes it a lot more affordable for those folks trying to buy a starter home.
Yeah, exactly. John, you agree with that? Jump in here, John.
Well, interest rates are very important. You know, one of the great mysteries has to be, if I go back to that 2017-2019 period, I find that even though mortgage yields were a lot lower on average, about 4.2% as opposed to 6.8% today, we had a much lower ratio of home prices to median incomes. I think we had home prices at about 3 times median income. Today, despite this jump by mortgage yields, we have home prices at nearly 4 times median income. This makes no sense. It tells me we need more housing, or if we can't get more housing, why don't we try expanding job opportunities in those parts of the United States where housing is cheaper? Why not have the federal government begin to move agencies, say, out of the Washington, D.C. area to these other parts of the United States that are sort of like economically dormant and could benefit from a bit of a spur in demand for housing, and that could bring people into these lower cost regions. Otherwise, unfortunately, I think what we're facing is another episode of home price deflation that'll be in the context of a recession, and that recession will do the trick of bringing mortgage yields lower.
What do you think, Larry?
I think that's absolutely right. In the next administration, yeah, you have 2 real problems. 1 is high interest rates. 2, you had stubborn inflation. Obviously, that's come back down. But if you can create modest inflation and you can have lower interest rates, and I also agree, create strategies in those more affordable markets with job opportunities and, reasonable interest rates, especially in the, what's called the starter home, it can be a net real positive across America.
So, look, we've got new research from the Cleveland Federal Reserve, which finds it may take until mid-2026 for rent inflation to subside to pre-pandemic levels, Larry. Rent inflation has been one of the stickiest when we look at the CPI every month. Your thoughts on the rental market as well?
Yeah, so it's been an unusual phenomenon during and post-pandemic where interest or rental rates really, really spiked. We're actually seeing across our 18 markets around the country that rental rates are starting to moderate, and we believe that trend will probably continue through 2025.
Well, we keep hearing it's coming. Steve Schwartzman told me that a long time ago. Rents are stabilizing. They're coming down. Still a problem, so we'll keep watching on it. Larry, thank you.
Happy to be here.
And to you, Larry Connor.